Hello, traders. It is 12:01 p.m. Chicago time on Thursday, the 27th of May, 2021, the last Thursday of May, 2021. Make the best of it. Today, we have a study hall. The study hall is about trading news events and using CT News. So I'm not going to spend a lot of time going over CT News and all that. We have videos on that, and it's pretty straightforward. But the bottom line for this topic is the use of news and the use of the news service. So here's what we're covering. Our focus: a brief overview of CT News and features. So I'll just go over for anybody that hasn't used the service or doesn't know it very well. I'll go over that for a minute. Next, I'm going to cover how news events are reflected in the price action, how we choose to trade or not trade these news events, an explanation of the scene of the crime concept and the importance behind it. And we'll do a recap of a recent news event example, which today kind of handed us one. So let's go over CT News. Yeah.
Did you do the disclaimer?
You know, I'm not really sure, but I'm going to tell you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's take a look at the news screen. So I'm going to have these kind of side by side here, just so you can see what's going on. So here's CT News. Of course, you can get to it by logging into your member portal at community.convergenttrading.com. My news feed is always on. I don't think I've ever traded a day without the news feed, a news feed of some sort running. So go to CT News, community.convergenttrading.com, and click on the news button, which will show up if I expand this. You'll see it at the top here, CT News. And once you get in here, you have to engage it. It'll be off air and you have to turn it on. So that's how you access CT News. It's just you go to CT News, the CT News piece, or you can go into the menu up here, click on CT News. And if you click on CT News, it starts with the player not running. It doesn't automatically start the player. Hit play. The button starts to blink back and forth, and every time they talk, this will kind of flash in and out depending on what they're saying. So that's how you start the service. The meter, the connection meters simply tell you that there is a live connection going. There are two types of connection, TCP, UDP. Let's not get into that. Those are just internet protocols. The 538 milliseconds is, I'm not really sure what that is. It doesn't really matter what these are. And the signal quality is the last number. It needs to be above 2 or so, because, you know, we're fiddling around with it today. Couldn't get it above 2, but it's working fine. And then it'll tell you how long you've been connected for. So those are the meters. If this is dead and there's no movement, or you have zeros, then there's an issue with the connection. It means you're not getting news. This is how you know you're connected, okay? The news feed tab is the default tab. It immediately shows you a list of all of the headlines going back. And as you scroll down, it'll load older and older headlines. So here we're getting to 2 days before, and so on and so forth. Whatever they read, within a few minutes at least, they will update, so you can go and look at what they said. And some of these have more detail. The ones with detail will show a little chevron down, and you can expand it to see all the details that is needed. Okay. The reports tab just gives you the briefing reports and the wrap-up reports. There are 3 reports that come out every day. And in general, it's giving you the briefing in the morning before the open. So this is the EU briefing, is before the 1 a.m. open in the treasuries. in Europe, and then the US briefing happens at 6:07 a.m. or 6 a.m. Chicago time, and then the wrap up is really telling you what has happened, and so on and so forth. And it's just these are areas where you can come in first thing in the morning and get an overview of what's key for the day. What are the key headlines? What are the key pieces? Okay. And then the economic calendar tab is, as it says, economic calendar, and then there's always a line telling you where you are now, and it shows what has happened. It shows where we are and what has occurred so far, and this can be adjusted. You want to see the headlines from some time ago, you can go and select a date. You can also show it in some other time zone that you would like. Let's say you're traveling, but you want to keep it to the local time zone. You can also select all countries or none. So no countries. I only want to see Eurozone news, and there it is. You click on Eurozone, and it says that you have deselected 34 markets out of the 35, but it'll only show you what's important in the calendar for Eurozone. If I select all, generally I deselect the ones that don't really move markets, meaning they're not a big mover. Like, how often do you care about what's happened? Some release in Australia and Hong Kong, Netherlands, Portugal, Spain, Brazil, France is significant, Russia, Sweden, and so on. And I just eliminate those. So I'm looking at the big movers out of the EU and Asia. So Italy is definitely not one of them, and Australia is not either. Relevance, you can set it to only look at high relevance. So only high relevance is that, the 3-dot relevance. These are key movers. These are big ones. Medium relevance, sometimes things like the EIA report, the crude oil report, and so on, or you can view all of it. And event type, you can constrain it to whatever event type you want. You can remove everything but earnings releases and so on and so forth. If you don't care about treasury auctions, you can turn those off, and this morning's treasury auctions will disappear, the 7-year notes. Okay, so that's the calendar tab, and of course the help tab is simply linking you to resources we have for members to get help. Back to the news feed, I can always search the news feed, Biden. Okay, and now I have everything that includes Biden in the title or in the text. So this is all stuff relating to Biden. If I hit the X, it goes back to the way it was, and I can adjust the font size by clicking and clicking and clicking on the bigger font, or clicking and clicking and clicking on the smaller font. And the last thing is you can turn this into a pop-out window so that it's very succinct, and you can just have it sitting along your DOM or whatever, like this, just something that's off to the side and you can see just slightly. Okay, so these are all the features of CT News. Next, we want to talk about news events and how they're reflected in the price action. The most important thing I'd like you to take away from using the news is it's not just noise in the background. What your task is the trader who is constantly checking and staying abreast of the narrative, constantly looking for how the market's responding. Your main task is to track how the market responds to certain news. So if the market starts to behave erratically every time, volatility comes in, every time there's a news event about crude oil, then you probably want to pay attention to what's going on in crude. This happened. This this happened, I remember it's been sooner, but 2005, 2006, when crude was at $145 a barrel, the market was really moving with it. Why? Because at those prices, the crude being an input to pretty much everything we produce globally, that input becomes the driver of earnings and prices and inflation. So then you know that every time there's a crude event, the market's going to respond. So you need to pay attention to crude-based events. You want to pay attention to crude releases Tuesday afternoon, Wednesday morning, US time, things like that. That's the purpose of news, is to stay right on top of how the narrative is being impacted by geopolitical or fiscal or monetary news events. Key things like this infrastructure plan that's being proposed by the current president, or things like CPI, which are then impacting how the market's perceiving the Fed support for the economy, which is then reflected in the treasury markets, in euro dollars and things like that. So this is where news matters. It's not so that you can catch. A lot of people dismiss news as, it's stupid to trade news. It's too fast and there's really no edge. That's not the point. The point is to make sure that you're aware of what's driving price, because we're not a macro global traders, most of us. We're looking at the price action, and if we're looking at the price action, really the bottom line for us is, how is the auction responding to various news events? So does the price action remain directional after a news event? So the news event we'll cover today is the capital gains one. If the market drops and continues to drop, this becomes a significant play. And in tomorrow's pre-market summary sheet, it'll be on one of the key things to watch is any comments or action relating to capital gains, right? So is the market directional? Does it remain directional as a result of that news event, or is it immediately dismissed like the CPI was? Was the news better but the price action worse in your product? Where in the ES, NQ, RTY, Dow, or whatever index, and we see that the market responded negatively to good news. This tells us something. This tells us something about what the larger participants are paying attention to. So unemployment comes out much better, and the ES sells off. Okay, looks like the market's concerned about the increase in wages, the reduction of monetary policy, that sort of stuff. It's being sensitive to the fact that we're approaching full employment, which means prices are likely to go up to attract talent, things like that. So although the market's being driven by fundamental events all the time, you don't have to be a fundamental trader to exploit an edge in it. So this is how news events are reflected in the price action. If a big thing is coming out, FOMC, and the market remains in balance, it flutters for a second and it remains in balance, it's telling you this is not a significant event and you're not needing to accommodate it the next time it occurs. How we choose. Yeah.
Sorry, before you leave that point, you were talking about going down. What do you do when the market just keeps going up on good news and bad news? It recently, in the last few years, it doesn't matter what the news was. It just seemed to always go up.
Yeah, so this is where I'll give you a contrasting example to this. 2012 or 2011, 2012, for example, the market was very attentive to news. Every news event, every election-based headline got a reaction from the market. Currently, any news event or whatever doesn't get any persistent directional movement. Generally, it just goes up. Inflation is almost twice what's expected. bleep down, go to 40.95, and next thing you know, you're trading at 4,200. And what this is it's telling us that the market has so much money in it, so much liquidity, that even on bad news, it is simply chasing better prices. So we want to be in this environment. We know that we don't want to press the short side just because the news looks bad. So we have a sell-off. We don't want to press those. We don't want to press our shorts, even as a swing trader. So this is where it's useful. It's basically saying, hey, the price action is positive on good news. Yay. The price action is positive on bad news. Yay. So we know that we don't want to keep pressing our short trades. So if you look at the scenarios that I'm creating every morning, you'll notice that there aren't any 50, 60 point trend down scenarios. It generally goes to a certain area. Recently, it was looking for 175, 170, consolidate and come right back up, because there's still a lot of money to be deployed somewhere, and generally it chases equity returns as it is, and that'll continue until until the Fed starts absorbing liquidity or reducing liquidity in the market. It's likely to continue. So the Fed and interest rates are a really, really big piece, and they have been since Greenspan, since back in the days of Greenspan in the early 2000s, where the Fed is just simply controlling what happens with asset prices. Essentially, the Fed has become the creator and controller of bubbles. How we choose to trade or not trade these events. So it's really important to pay attention to this. We don't recommend trading a scheduled release. If you're here for CPI, if you're here for Michigan sentiment, PMI, FOMC, if you're here for whatever, the idea is not to have your finger on the mouse ready to go, the numbers coming out in 60 seconds, and you're just kind of ready to go trade. Don't do it, because that part, the scheduled release, has been arbitraged out of the market. And I'll tell you that when I started, even when I was an equities prop, but especially in futures, because the futures markets respond more evenly, I would say, to news events, because they're a wider sector than an individual stock. In futures, I can tell you that easily 50% of my gains for the month came from news events. Really, really important to trade news events. And over time, all you did in news events is dig a hole and spend a good portion of your morning trying to come back from it, because there are systems now that get the news via text much more quickly, and they're able to decipher or read the text headline, and you can pay a lot of money to do it, to get it that way. You can read the text headline. The system will read a text headline and put a preset position on based on that. So you'll see the move occur before the person even reads it. So don't even bother to trade a scheduled event. However, one thing that news does is it introduces volatility, and volatility is good to an extent. Uh, in that it is introducing movement or wider ranges, or a turnover in holdings. And what that does is it creates opportunities for gain and loss. It widens the market. So this is what we're after when it comes to a news event. And what we would suggest, if you're going to trade, we suggest you have a plan to trade news events. Many of you have heard me talk about this before. The FOMC comes out, the market's doing this. The FOMC comes out, it does this, it does that, and it comes back to this first move. 1, 2, 3. This is the move I'm after. And this is the move that clues me in. So, and sometimes what it does is it goes like that, goes like this, goes like that, and then it goes like that, and then it goes like that. I'm not trying to trade this move here. What this is saying is the first swing, the first reaction was an overreaction, and it's just not, these people are likely to be trapped, and it just is directional. This is very hard for me to jump onto. But if the market happens to push up, pull back, and then we see it coming back up, this is an opportunity for a continuation trade, and that's about all it offers. And very, very quickly, you'll notice it'll take out that high, consolidate, and then for the rest of the session, it's kind of doing this. And it's really the only opportunity that's available. So if you're going to trade, in my opinion, you look for the continuation trade as long as it complements the narrative. So if the market's been squeezing higher all morning and we get a flutter up on news, then I'm looking for the long on a retest of that initial swing. And I don't have to wait for the high to break, although you can do a breakout that way. But generally, we get clues well ahead of that, and that's really all I'm looking to trade on news events. So the third leg of the news event might create an opportunity. It is better not trade. It's better not to trade news events, but if you don't mind volatility, this is what you want to do. What you don't want to do is know that the market is expecting durable goods to be positive, it comes out negative, and you go and sell at market. This, chances are you're selling the bottom of an initial move. Um, you're the last person there. Okay, so I would not suggest you trade the news itself, but look for an expansion and look for the market now hitting the targets that you've set out in your scenarios and your plan after the news event, while before the news event it was just kind of lazily snaking around waiting for the news to be done. We don't trade surprise events, so there are surprise events as well, like a tweet from a former president that says that we're going to war with China over, grain trade, or we are sending a fleet of ships to Taiwan to defend it, or stuff like that. These are not. These are surprise events. These events also introduce volatility. Generally, are more violent because they're not anticipated. They have the effect of cleaning up the price action. So in general, there are a lot of market makers and algos that are taking advantage of very small moves in the market. They're sitting there all day long, bidding and offering and bidding and offering. On surprise events, you'll see all those machines get shut off. Generally, there's a sweep or there's a spike, and then they just completely shut off. And what it does is it provides a more pure or more clean pricing structure, price movement, because those market making kind of machines are turned off for a period of time. Generally, they come back relatively quickly within a few minutes. But this, you don't want to trade surprise events for the reason that it's introducing volatility, but also without a lot of experience, it's really, really easy to get emotional on a surprise event. You're long, you got stopped out, you get short, it pops back to the SOC, and now you're getting long again because you're trying to reestablish position, and actually that would be the number 2 wave, and number 3 is coming and it's going to sell off, and now you bought it, you sold it and got stopped on the short, and now you're buying it and you're getting stopped on the long, and it's really easy to get turned around on a news event. Explanation of the scene of the crime. Scene of the crime is something that came to me in 2005, I think, where a perpetrator of a crime, very often, if you ever watch, murder mystery or even those unsolved murder shows, you'll see that very often the perpetrator of a crime tends to come back to the scene. An arsonist will light something on fire, and then we'll generally come back and watch it burn and watch how people are responding and watch the panic that ensues. So we call it the scene of the crime. And the market generally, the auction generally comes back to the scene of the crime. So the market is an auction. It is it's performing its price discovery all day, 24/6, right? Unless it's crypto, then it's 24/7. It's doing this discovery process, and then some external event causes the market to get interrupted. So it causes participants to shift their view on what value is or what prices should be, and the auction is interrupted. The last price that traded within the auction is the scene of the crime. This is the last print that went off within the auction, within the range of where it was before it had to be completely repriced. That's what we call the SOC, or the scene of the crime. It's the last price before the auction is disrupted by news. The amount of disruption that is caused clues us in on what the larger participants, the big players, the people who control, just through their sheer size and the business they need to transact, they control whether a trend exists or the market's is in a consolidation or whatever. The disruption of a news event gives us a huge clue about what those participants care about. If the market's trading sideways and all of a sudden there's a news event that there's capital gain tax increase, and now the market has a really an outsized move. In other words, it just has an impulse or better or something like that, something that's unusual, and it reprices and remains repriced, remains at a lower price. We know that this is a big piece, that the cost of higher capital gains are going to impact the performance of the fund that they're managing. And this is an important subject that we need to pay attention to. But if there's a disruption, the market's trading at a price, and then news comes out, scheduled or unscheduled, and it just drops and it comes back to the SOC, we know, we're clued in on the fact that the market doesn't really care. That's what happened with CPI, right? And so the market doesn't really care. We don't care about this news. It seems like a big deal. The news channels, the financial networks are talking about it all day, but the price action is saying, we don't really care, and you shouldn't either, right? So it's not that significant to the market. So I'm going to give you an analogy so I can help you try to remember how an SOC works. And now the analogy is, you're walking down a path in the woods, and it's a path that you've been following. You're going in a specific direction and you have an objective. Maybe you're summiting a mountain, or you're taking a path to a cabin or a village or whatever. But it's an established path, and you can see where you've been, you can see where you are, and you can see where you're headed. And then a bear appears out of the woods and it comes chasing you. You're obviously going to veer from the path. You're going to run through the woods and all this stuff. Once the event is done, in other words, you got rid of the bear, generally you would return to the path and resume the journey. This is what we would expect, right? So you'd come right back on the beaten path and you just keep walking. This is how the market will auction, will dismiss news and continue to auction. That's how we return to the SOC, and we resume the auction as if that little piece didn't really occur, okay? If you don't return to the path, then we know something dramatic has occurred, and this is noteworthy, right? We know that you got injured, you got killed, eaten, whatever. Keep that in mind. If the market leaves an SOC and it just moves away and it doesn't retest it, something significant has changed. Some global macro perspective has come into play, and this, with you being an auction and price action trader, you're kind of one of the first to see this occur. And this is how this is why a news feed and being aware of news is significant. We always determine the SOC and keep it in our notes, chart, trading platform until it is tagged or tested. Okay, so we want to see, it's almost like a marker, like the opening print of the day is another marker we use on a daily basis. How are we trading versus the opening print? If the market opens and it goes above the opening print, below the opening print, pushes down into the prior day's range, comes back to the opening print, we know that the market's really not directional. It's just floating around, which describes today's action. And you've seen today's action is very anemic in terms of what it has accomplished. Open, above, below, cross the open, below the open, cross the open again, below the open, above the open, below the open, above the open, down into the prior range, rejects the range, above the open, below the open. This is kind of like, this is another kind of milestone, just like the SOC is. So let's look at, to wrap this up, let's look at an example of a news event. So this happened today at 9:50. Across the news feed came this audible headline, which took them, I don't know why it took forever to get printed, but the event itself occurred at about 9:50 in a few seconds. The headline was Biden budget set to assume that capital gains tax rate increase started in late April. So there's an assumption in the president's budget that they will have started collecting or implementing this capital gains tax earlier, which of course a change to the tax code is required to go through Congress. Congress is supposedly who controls the purse in the U.S., the bank and the money in the U.S. So this is just kind of a shot across the bow yet again, and a reminder to the market that capital gains tax is going up, right? This is what this administration wants, and it wants it on a certain very high net worth group of people, group of earners. The SOC on this news event is 4209 and a quarter, okay? And the SOC, that's the last print before the market responded to this news. And as of the beginning of this webinar here, the SOC has not been touched. So we went through the morning high, that we put in earlier today. The 4209 quarter was the opening swing. We dropped below, then we pushed 4210, and then right after getting to 4210, this news hits, and the last print's 4209. We dropped from there very quickly. It was the largest rotation of the day. At that point, we dropped very quickly to 4,200. Yeah.
Sorry, can you put a chart up as you're talking?
Yeah. Sure. Why is this not coming here? There we go. So there's 4209. It's the opening swing high. And then we went to 4210, and then news hit right here. And you can see that the delta responded, price responded, and it is the widest rotation, or the largest rotation up to this point. It's the largest rotation, and it's down. So it went to 4201 quarter, and then it pushed to the low 4275, which happened to be the IB. And then the market responded the other way, got to 4206. So the 4209 remains untouched. It's the SOC, and it remains untouched. So by the end of the day, I will mark this as the ESSOC capital gains for today's date, to mark that the market has not come back to this price, okay? Here's what it looked like on the heat map. There it is. I restarted my platform, so I don't have the heat map at that point, but here's where we pushed to 4210, pullback, and basically grinding back to 42.10. And then we get this last print right here, 42.09, and then gap down. It gaps one tick, 42.09 quarter, gaps to 42.09, and it runs down. Very weak pullback. Once it looks like it overshot, very weak pullback. Look at what's happened to the delta at that point. Pretty decent drop in the delta. All this movement is very undramatic, by the way. We're talking about 8 points of range. It's just been really dead. But we get the delta coming with it, and then this SOC has remained open since. So this is informing us that this is relatively significant news. The market has dropped and it has not attempted to come back to this price. But in general, the market fills the SOC at some point. So here's a continuation down into the prior range, but it's not able to hold the prior range. And here we're making our way back. We're above the opening print for the day, and we're making our way back. And it's really, the auction has kind of resumed to what it's been doing, but it has not fully recovered to the 42.09. So the SOC remains open at 42.09 up here. That's quite a sell print there, 2866 down. This looks like news again. Let me see. There's probably a news event coming. Anyway, so that's what the SOC is, and we need to keep an eye on is 42.09. We generally expect this auction to come back to 42.09. If it doesn't by the end of the session, then we may have a temporary swing top here, depending on what happens next. I don't think this is lasting news, but in a nutshell, that's how we use our news feed, and that's how we take advantage of news in trading. That's all I had for you for today. Do we have any questions?
There's a question. Can you also cover recent calendar events that left single prints and unfilled gaps in ES and NQ?
Oof. I mean, I would have to look at the master levels and find an SOC. I mean, I'm scrolling way down.
Yeah, I asked for an example, but unfortunately they weren't able to provide an example. I'm also not clear on what they're looking for, what the purpose of it, because I think it's more important, as you explained, is the moves, the three waves, and or is it coming back to the scene of the crime? So I'm not clear on what they're looking for on that question.
I mean, the last time we had something that meant anything was the CPI. Which was where? When was the CPI? I don't remember. The days blur for me, but it should have been, I thought it was back here somewhere. So it's a 730 number. Did it go? I don't think this was CPI here, but CPI left. The CPI did leave. In fact, hang on, I can find it. It's in my cloud notes. 1 second. CPI 512. So let's look at that. 512. There it is. There's a CPI. This is 430. Something goofy here. So CPI came out 512. This is 513. Ah, this is it. I recognize it right here. See this CPI? So the CPI disrupted the auction. The CPI SOC was up here somewhere, 4131, something like that. It came out, it flashed down. These are all singles pre-open. These are all single prints pre-open, and it came almost all the way back, and that remained open until way back here. when we closed it. And in fact, we didn't even close it back here. We had to wait several days for it to come back to the 31 during RTH right here, the 18th, 6 days for it to fill in. So if you look, if you want to see the single prints on an SOC event, I would suggest you go take a look on at 8:30 Eastern on May 12th. Okay.
Okay, that's it.
Okay, very cool. Hopefully you gained something today. The news feed is a lot more valuable than you would think, and definitely a lot more expensive if you went out and got it on your own versus incorporating it into membership. Make use of it. It's constantly telling us what the market's mood is, and it's something you want to have running in the background so you can keep abreast of what's what. Okay, so make sure you use your news. I'll leave you with those thoughts. Thanks, Yoda, for moderating, and hopefully you guys found this useful. Take care.